Weather. I think the very cold weather is playing havoc on all of the economic data. It's weighing on growth in the first quarter, and it's evident in the ADP number. Now, the ADP number doesn't reflect the direct impact of the weather. So, if I were shading the BLS report relative to ADP, I think it could come even weaker than this number because of the direct impact of what happened in February.
I just think that it's pretty clear that the ISM non-manufacturing number, for example, is so bad that that's what even makes it more likely it's weather. If it was just the economy, it wouldn't be that bad. So I think that even the beige report's going to be affected by the weather. There's so many companies disrupted and not being able to do business several days of the year. I think that's going to show up in the beige reports as well. But the market is clearly looking through that. I think correctly so, Simon. I think this economy, as the year winds up, is still going to grow north of 3, probably 3.5%. I think we're going to find out when we get into the spring that we're going to have much stronger numbers and a catch-up from what we lost here in the first quarter.
I think a stimulus package will be a necessity. Without it, growth will slow well below target. Actually, China's potential growth is only around 6%. Whatever they get beyond that comes from either monetary easing or fiscal easing. And in China, the fiscal easing usually doesn't show up through a bigger budget deficits in terms of the central budget, but through larger local government debt and spending, and through state-owned enterprises getting state-owned bank funding to invest in infrastructure. So I'm sure that they will boost infrastructure spending in the second and third quarter as they have done in the previous years. Otherwise, it will not be possible to grow 7.5%. Well, these reforms can continue. The reforms that I had been hoping for are in the financial sector, and especially when it comes to deleveraging, because Chinese debt-to-GDP ratio for the whole economy is 225% of GDP. It can only increase, and sooner or later, if it's not tackled, it will cause a crisis. The later you tackle it, the bigger the problem will be.
We get very excited about these movements in the PMIs, a little bit up one month, a little bit down the next month. The key message is that they've stabilised just above the 50 no-change benchmark, and for a number of months now, for the past 7 or 8 months, they've been signalling growth of around about 1/4% in the euro area, and that's what we continue to see today. And at RBC, that's what we expect to prevail throughout 2014. So I think the recovery continues, but it continues at a very lacklustre pace. France is the real standout, and I'll come to that in a second, but I think there are 2 key points. The first is, if you exclude France, all of the others, whether you're looking at manufacturing or services, are now above 50. So whether you're looking at Italy or Greece even, or whether you're looking at Germany, they're all above 50. So it's signs of broad-based improvement in the macro outlook in the euro area. The French numbers are the big outstanding weakness, but I would say that we shouldn't place too much emphasis on that. The French PMIs are not a great indicator of French GDP. You're better off looking at some of the other high-frequency and survey data, and they picture a more positive outlook for France. It's not going to be a great year for the French economy, but I don't think it's going to be anything like as weak as the PMI suggest.